Alrighty, now we're going to talk a bit more about the mortgage market and non-bank lenders in particular, who appear to be stepping up their game in a bid to win business from both mainstream banks and rival non-bank lenders. And it seems more borrowers are willing to give them a go. And that's all according to Denjola Bhutia, who's the director at mortgage brokerage 910 Finance. I'm pleased to say Denjola joins us now. G'day, Denjola. Welcome to the Savings Tip Jar.
Hello, Dominic. Thank you for having me here.
Thanks for joining us, Denjola. It's great to have you on. Now, before we jump into the world of non-bank lenders, do you have a savings tip for us?
Oh, yeah. Thanks for Brooke as well for having us here. Yes, I do have a tip. A tip is don't change your mortgage repayments when the interest rates go down. So what's happening is we've seen the interest rates been cut off in the last few months, and there is news about the interest rates going to fall from, let's say, from a 6% to a 5%. So what that means is if you typically have a $700,000 mortgage on a 30-year repayment period, as per Savings.com.au calculator, with the extra repayments, you'd be able to save around $188,000 on your mortgage and interest. That's massive. Or you'd be cutting off 6 years and 1 month in your early by paying it early. So yes, please try and not change your mortgage repayments if you can, and you'll be making a massive savings.
Yeah, definitely good tip, Denjola, and definitely one that we've talked around the office a fair bit. Obviously, with all these rate cuts happening, a lot of us have got mortgages ourselves, and are all sort of working out: should we keep our repayments the same, or do we let it fall down to the minimum? And I'm glad to hear as well that you use our calculator, repayments calculator.
It's a beautiful website there. Yeah.
Very glad to hear it. Thank you very much. And we have not paid Denjola to say that. Just okay. So yeah, non-bank lenders, Denjola. For those that maybe aren't totally aware of them, what is a non-bank lender? What separates it from a bank? I mean, besides obviously the name is a big clue there, and why would some borrowers perhaps have greater borrowing power with a non-bank lender as opposed to a traditional bank?
Yeah, so normally we have our big fours, CBA, Westpac, ANZ, and NAB. Besides that, there are other smaller banks. But what non-banks lender bring to this lending mortgage space is variety. There are lots of non-bank lenders which people might not heard on a daily basis. So without naming names, I think there's close to 30 or 40 of them. So what do they bring to this space in terms of lending is the way they have a little bit of extra variety in terms of borrowing capacity. They are more open to people, those who don't have a regular type of income or PAYG income. They're more favorable towards self-employed people. So these are the things they bring to the table. But more importantly, in our topic of conversation, which is going to happen today, is in regards to borrowing capacity, where we can borrow more from a non-bank lender as compared to all the major lenders.
Absolutely, yeah. So there's a lot of talk at the moment about the APRA serviceability buffer. I know I wrote on it, God, it must have been 18 months ago, about whether we need to drop that buffer because it got boosted in the pandemic, didn't it? And so banks then had to assess whether a borrower could afford their repayments if their repayments were to rise. Is it 2.5 or 3% above the current interest
3%,
rate?
Yeah, 3%.
3%, yeah, which is significant. I mean, if you've got a home loan with a 6% interest rate, you'd have to be able to see if you could repay it if your interest rate was 9%. How do non-banks differ in terms of that serviceability buffer, Denjola?
Absolutely. And that's the question we get. How can the non-banks give us a little bit more as compared to the others? So the first things, like you mentioned, is people do come to us all the time and they say, hey, I'm able to pay my rent on time for the last 10, 15 years, but I can't even get a mortgage. Why is that? And my rent is very similar to the mortgage. And that's the reason the assessment buffers come to place. Like if the interest rate is 6% in the market, you're being assessed at 3% on top of that, and that's 9%. As compared to the second or third tier lenders, probably the assessment rate could be anywhere between 0 to 3%. So some of them have no assessment buffers at all. Some of them put a 1%, some of them put 2%, and accordingly the interest rates are charged accordingly with what kind of assessment rates they have. And that's one of the main reasons that the interest rates the borrowing capacity keeps differing. And it makes more difference if people have multiple properties than just one property. With first home owners, there's not too much of a difference in the borrowing capacity. But if you've got two or three properties, that's where the main game changer happens. And the borrowing capacity, as in the article, could change anywhere between $100,000 to $400,000. And that's not just the only reason. There's few others, like how they treat negative gearing, how the second tier banks treat negative gearing, how they treat expenses on properties. If you put the strata in there, if you put other cost management fees in those, and how the HEM is calculated as well, so the standard living expenses. So all those combination, these are the things that actually increases the borrowing capacity. And and assessment buffer is the number one reason, like you said, Brooke.
Now, Denjola, you're saying that non-bank lenders are becoming more of an emerging force in the market. Exactly how much are we talking here, like in terms of loans under management, and sort of what percentage of the market are they now making up? And also, what do you think is underpinning that growth?
Absolutely. So the last article that was there is, I think it was about 1 or 2 years ago. It's 11% was the number, but I think we are closing towards 14, 15 to 20%. I'm not very sure about the exact numbers because these figures are generated by the thing, but I think it should be increasing day by day. We see that. Again, on the other front, we've seen the big banks. Everyone's fighting for business. Mortgage is a very ruthless business. Each broker, everyone's fighting for it. But I think the numbers are getting healthier, at least in our business or in a day-to-day business. We do see the numbers increasing on a daily basis. The awareness is increasing. People understand that rather than buying a 400 property, if they can buy a 600 property, we are happy to pay a little bit extra on that point of view. So that's from that point of view, we see the growth happening. But again, it's not for everybody. Understand this. It's a non-bank lender. It's not for everybody. That's why the majority of the business is still on the big banks. But if people need the money, they are happy to do that. Just if I can give you a quick example, let's say a person wants to buy a $550,000 in dollars investment property, and they've already had two properties and they capped out. The big bank saying, no, I can't give you any money. And the second tier lenders go and give you that money. And let's say you're paying 1% extra. So not many people are willing to pay that extra percentage of interest. So they're paying 1% of loan extra. So on a 550 loan, on a period of 5 years, technically you'd be paying around $27,000 extra on the repayments because you're paying 1% extra. But if the property grows at 7%, which is very conservative, I think last few podcasts I've been hearing from you guys, like there's been growth of $300,000 across the board in a few years and all those stuff. But anyways, going at 7%, if there is a growth of 7% at 550 property, the increase is at $221,000. So you're still net profiting $194,000 just because of that 1% interest rate you're paying more. Obviously, the other costs and stuff which we're not discussing, it's on a very high level. So, but again, if you do the numbers, that's how it is. So from that point of view, I think the non-bank lenders shares probably will be looking better in the coming years to come. Yeah.
Absolutely, yeah. Is there a particular type of property buyer that you find is more skewed towards non-bank lenders, Denjola? Like you mentioned, they can often factor negative gearing in a different way than traditional banks do. Like, where do you find the most interest in that type of lender?
That's a very good question because I don't know how people look at investing, but because you've done massive amount of podcast, I'm sure you're looking at entry level investings because people are happy to spend, let's say, $1 million on their home. But when it comes to buying an investment property, everyone's comfortable with a 500, 600 range because as long as they're investing, they're okay with it. They don't need. So those are the areas which we are seeing a lot of interest. In these type of markets, people are happy to go regional. After COVID comes, everyone's flexible. So investment in regional areas or anything in smaller towns, people are not very scared of going and dipping their hands for investment property these days. So those are the real areas which we see a massive amount of growth in. Let's say sub 500, $400 to $600,000 property. That's where we're seeing a lot of investors getting in at the moment. Yeah.
Now, Denjola, last week on the podcast, we talked a lot about how brokers such as yourself are so dominant at the moment. I think it's like about 80% of borrowers go through a broker. I understand, obviously, naturally, non-bank lenders are also, finding a lot of their leads are coming through brokers themselves. So, are you finding that non-bank lenders are perhaps, more willing to work with brokers than say other lenders when it comes to securing customers?
Yes, look, I think for most of the non-bank lenders, the majority of the business is coming from brokers because brokers do understand how lending works. So, look, whenever a typical client comes to us, if it's a first-home buyer, everyone just focus on rates and all those stuff. But as people understand mortgage a little bit, once they have their personal home loan for let's say 1 or 2 years, they want to grow out of it. That's where the structuring comes into play, and that's where borrowing capacity. How do you multiply your wealth? What can you do to have more investment properties and be financially free? And if for us as a mortgage broker, absolutely, if you fit into a major bank, we'll never take them to a non-bank lender. But as things change, as circumstances change, it's very much likely that your requirements change, and maybe after a certain period of time, the bigger banks don't fit into your portfolio, and that's where we come into play. And lots of our BDMs from the non-bank lenders do come to our office, and they tell us what's the point of difference. And just the previous example we have given, just by paying an extra 1%, we might be able to make a profit of $190,000 in 5 years. So if you do the numbers, yeah. So with them coming in, they're pitching in more. I think there is a right segment for the right segment of clients. It's absolutely worth it to explore these type of non-bank lenders for them. Yeah.
Absolutely. And last question, just quickly, Denjola, from your perspective as someone who looks at people's mortgage applications day in, day out, do you think there's an argument for APRA to drop that serviceability buffer that we were talking about just before?
It's a little bit of a I feel it's a danger zone always commenting on APRA stuff, but I think it should come into play at least from my point of view. I don't think they will be dropping anytime soon. Okay, but if I was to suggest, probably at least by half a basis point or dropping by just a 2% buffer would really help lots of especially first home buyers, those trying to make entry into the property market. It might be a good step going forward. But from my point of view, I don't see it coming just as yet. I hope I'm wrong, but I don't see it coming just as yet.
Yeah. And don't worry, Denjola, there's been plenty of other guests on the podcast that haven't been afraid to just to call out APRA for that buffer and argue that it should be much lower. And ourselves included, sometimes we do look at it and think 3%. I mean, in a falling interest rate environment, it doesn't really make a whole lot of sense to me anyway. But I guess I can sort of understand it in terms of financial stability and whatnot. It's always good to have a nice solid buffer in place to ensure someone can meet their repayments no matter what happens. Denjola Bhutia, thank you very much for your time on the Savings Tip Jar podcast. Really appreciate your insights.
Thank you, guys. You've been doing a great job. Keep up the good work.
Thanks for coming on, Denjola. It's been great to pick your brain on the mortgage brokering business.
Cheers.